Hello everyone, and welcome to another exciting episode of the Financial Insight Show. I'm your host for today's discussion, and my name is Mwelwa Chibesakunda, and we are currently at the Agora Village in Lusaka at the Africa Works offices where this interview is taking place. And with me for this particular interview is our friend, Mr. Mutisunge Zulu. How are you, Mutisunge?
I'm very good, thanks, and thanks for hosting me. I'm excited to be here.
Absolutely. I mean, it's always a pleasure for us to actually engage. I think we've had one or two opportunities where we've had a few commentaries, with you. But right off the start, we were recently at Mining Indaba, the 2025 edition in Cape Town, and obviously as Chief Risk Officer, you accompanied CEO Mwelwa Chibesakunda as part of the EXCO team that was at Indaba. Are you able to just share with us, from your perspective, because we know that you have published a summary of, what some of your key takeaways were, and obviously, this comes on the back of Minister of Mines announcing the 11%, surge from 2024, from 2023 to 2024 in terms of, copper output. What were your key takeaways as well from this year's event?
Okay, so thank you very much for that question. So I think it was a very momentous moment for Zambia. It was my first Mining Indaba, and I know that in 2021 when, different regime, there was a change, Zambia went to make a statement. And
Zambia's back.
Yes, they left everyone biting the dust in Cape Town. So this time Zambia went back to the Mining Indaba with a very positive message. 12% increase in production. You're looking at 820,760 metric tons. Zambia has an ambitious target to hit 3 million metric tons by 2031. It's got everyone really speaking, but I think that after this Indaba, 3 million metric tons seems a very, very huge possibility. It can happen. They say always aim high and then get very close to where you need to be. So the initial focus was that Zambia should be hitting 1 million metric tons by 2027. But having shared an elevator with the minister that whispered and said, no. The target is 1 million metric tons this year, and this is 2025. The Indaba in itself, if you look at the theme, future-proofing African mining today, what really is future-proofing? It got me thinking, looking at some of the, what needs to happen exactly to, future-proof. So it's within the future-proofing that your production then increases. So the first point, of course, what's homogeneous across African nations is that energy is a challenge. Energy is a challenge not because of climate change, for those that are heavily dependent on hydro like us, about 80 to 85%, but it's also the reform process. A number of African jurisdictions are at different levels of reforms. We are talking open access, it was just launched recently.
Yes, last week, yes.
Net metering, the wheeling process, license expediting, now it takes 48 hours instead of 90 days. Previously, you would wonder why it was taking 90 days. And the most topical and stickiest point, tariffs. So like I always say, Mwelwa, there can be no effective or energy reform without tariffs. You can talk open access, net metering, but if your energy is not priced correctly, it's not going to attract investment. I learned something. I heard MD Africa Green Co, that's 𝗬𝗍𝗍𝗍𝗍, saying liquidity finds a home where yields make sense.
Absolutely.
So the question is, there's a tariff issue. So to future-proof African mining today, we need to address the energy issue. Population is booming. More mines are being discovered after the geophysical mapping exercises. But you can't mine using solar. A lot of people get excited when you talk about renewable energy.
Correct,
like, solar. You can't mine using solar. You need base load. So to get to that base load, investment. So that's one point. The second point of core is that technology needs to change. The technology equation is not so much affecting the big corporates. It's the artisanal miners. The biggest headache that most mine ministers have is, how are we going to deal with artisanal miners? They know where gold is, they know how to mine, but a lot of them are using hammers and, for processes that can be digital in nature. But you see, I look at artisanal miners like SMEs, So the quagmire or the quandary for artisanal miners is the same quandary for SMEs. It's only that SMEs are do business legally, right? And I hate to use illegitimate or there is an opportunity, and I think that's one of the headaches that the mines minister I think put out to say, how is he going to legitimize to help them with licensing? How can they do some sort of more like an outgrower scheme arrangement to add on to the already existing production? Because to get to 3 million metric tons, you need everyone.
Absolutely.
So that's another issue. Then the fourth issue would be really around sustainability. You mine the minerals out of the ground, but what happens to the ground? Do you plant the trees back? Do you think about the communities where you're mining? And you see, one chief in South Africa said, they're not difficult people. As long as you're mining and they're benefiting from schools, hospitals, roads, and livelihoods are changing, then everybody is out there to mine. And when you mine, a very interesting speech by the mines minister in South Africa, he says, don't lie to us that you've got us at heart. You're coming to make money, but as you make money, make sure you do the right thing. So sustainability, the ESG agenda is actually going to be very, very big. So that's about future-proofing mining. But coming back to Zambia, I think Zambia went to this Indaba after having resolved a lot of legal impasses that had hampered production, new equity partners for the likes of the Mopanis. Now you have the IRHs, Konkola Copper Mines, Vedanta is back. CapEx commitments north of $6 billion. FQM, the Barrick super pit was commissioned. And if you listen to all those developments, you'll actually make a view and give a forecast. And you ask yourself if super pit is going to add 360,000 metric tons, if the is it the S2 or the S3 is going to complete, if Mopani will start firing on all 6 cylinders, if KCM starts pushing, if the dewatering in CNMC, Luanshya Copper Mines is also going to start, adding on to production, then we should see an increased number. And you know what, Mwelwa? The interesting thing is, it's very painful to see the copper curve rise. If you look at copper on the LME, it's reverberated between about 8,900. It even gets just below $10,000 a metric ton. But then the question is, what is your production capacity? And mining is really, copper is really a bellwether for global powers. And I also say it's a bellwether for Zambia's economic growth trajectory. Mining is low-hanging fruit for Zambia. When mining booms, energy, real estate, construction, all these businesses and these sectors will then be lifted, and you can imagine that the copper belt of Africa will come back to life. So that's the exciting thing about this issue. I attended a very interesting session where the IMF did a paper that they haven't released, but of course we had these economists that were sharing what their findings are. They're taking a holistic approach from East to Southern Africa, where the things that I've spoken about, there's energy, it's an issue. It's also been discovered that the exploration budget globally, Africa only has 10% of the world's exploration budget. But then it made me think, when your exploration is low, it's got a correlation with what your tax regime is. But then the interesting thing is, you can't have a homogeneous tax regime across the entire Africa. Africa is not viewed as it's a continent made up of countries. So tax structures, of course, there is latitude and opportunity for improvements, because what the mines say is, if you're taxing them very high, their propensity to explore is very low, because they don't have money. But then if you get to an optimal tax structure, which is a very political and a topical issue, like what really is optimal? You're getting minerals in my backyard, and then you're making money off, so how much should I tax you? And then the second point of call was around energy. Reforms may also be a political issue. So to say, governments are really stuck between, if I charge you a higher tariff, it's going to fuel inflation and the cost of living, okay? In the short term, it may make a number of players unpopular. But if you take a long-term view, and if you're really interested in attracting liquidity, you will bite the bullet. Because eventually, yes, tariffs could go up, but then when flows start coming in, then eventually your electricity prices then sort of come down. And then there was a number of issues like political stability, There's countries that are still at war and you know, the like, and all that does affect the investor. But I'll tell you one thing on this recording, that mining is one sector that I've come to prove has nothing to do with a country's credit rating, it's nothing to do with interest rates, because most of the big conglomerates don't borrow within Africa. They borrow outside, you know. But then if we're going to talk about artisanal miners, we still have to think about financing packages. And you see, when it comes to financing packages, I always refer to the SME sector. There has to be an intermediary here. What is going to make it attractive for banks or financial institutions to lend money is when we have more guarantee schemes. The likes of the RTDs, the likes of the AFDBs, they need to come to the party to make this possible. And that's what is being discussed right now, and it's the biggest headache, because I heard artisanal miners. For South Africa, it's artisanal miners. For Zambia, it's artisanal mining.
Tanzania,
so how
yes.
do we get them to contribute to production rather than tag them negatively and call them illegitimate miners and think of, you know, yeah, they have families to feed as well. So it's a very, very topical issue. But I think positive, I'll end with a few remarks. The outlook for copper, very positive. Copper is expected to trade between anywhere between 10 and 12.5 grand a metric ton on the London Metal Exchange. This is being fueled by a very strong decarbonization drive. These electric cars you see around, the renewable energy, are all interventions to climate change, to replace fossil fuels. So irrespective of what's happening in the US in terms of policy shifts, I think that we've seen that China is actually producing much more in electric cars. So that will still drive demand. But from the supply side, there's a global deficit. And so that pushes the price, you know, upwards. And then there's quite some exciting things happening in Asia, such as warehouse capacity is increasing, smelter capacity is increasing, and China is stockpiling. So there's a lot that's really going on. And I would say in the medium to the long term, I foresee immense support for copper to keep prices fairly bullish. Yeah.
Right. Now, obviously, there's a lot of optimism around the copper space coming out of Indaba. Let's bring the story back home. Just recently, you know, the central bank, you know, announced the upward revision on monetary policy. This obviously will stimulate, you know, increase in lending rates. But then at the same time, you know, there's been the excitement that yes, copper production is increasing. Are you able to just give us some commentary around what you're now beginning to see following this particular announcement and what that signals to us? Because Financial Insight also follows, for example, the bond market as well. Maybe if you could share some insights in terms of the 12-month trend as well, because recently we've been reading publications that, you know, obviously appetite has, you know, is been surprising, if I can call it that.
Okay, so first let me start by mentioning that we are at a very critical stage of our economic life cycle. Zambia is on a path to restoring fiscal fitness. Zambia just recently restructured its debt. There's only about 11% remaining, which is about $1.8 billion. The bonds have been restructured, and I think completion of the debt restructure is what's going to determine whether Standard & Poor's is going to come and then eventually adjust Zambia's long-term issuer rating, which is still selective default. When Zambia made those significant strides, then came the drought. And drought was a headwind that then sort of negated the government in terms of the steps that it has been taking. So with a lot of support, drought comes with its own evils. We've seen inflation is now sitting at 16.7%. We have so many pockets of contributing to inflation. There's food inflation because of agricultural production, which was low, about 56%, and that tends to push food prices up. We have non-food inflation, which is notorious as well. In this non-food inflation, part of it is actually driven by FX. Because your currency is depreciating, there's cost push inflation effects. And because we import a lot and our currency is weak, so as we import, we're also importing inflation. Number 3, emergency tariffs. Electricity is expensive because we had that roughly, I think, weighted average 150% hike on tariffs, electricity, emergency tariffs, and they've been extended to, is it April, another 3 months. So for 6 months, we have very high tariffs. That's also bringing in inflation. And then there's one thing that people don't talk about, speculation. When everyone is hiking prices, even at the markets, when you sell tomato, everyone will tell you my tomatoes are expensive because of the dollar, you know, even when there is no relationship. So there's also speculation as well. And then there's another part that comes from liquidity. When a market is flush cash, People have purchasing power. You buy dollars using kwacha. So the liquidity aspect as well is also another driver of inflation. So if you add everything up, you will see that, oh my God, everything. And then electricity in itself also, if you go to the Purchasing Managers Index, you will understand that for businesses to survive, they've had two choices. Either I go and double my workforce to produce the same amount of goods that I'll produce in the period that ZESCO has given me electricity. That's if I can't afford to buy a generator. Or I can go and buy a generator and burn more diesel. And fuel prices have been high. Fuel prices have been high, predominantly 80% because of exchange rate. So selling prices are high. So we've got so many pockets of inflation. So because inflation has been running away, then there is a black swan factor that kicked in. Policy shifts in the US. When you talk about trade tariffs, that's inflationary. The uncertainty that we are seeing created a very strong dollar environment, and because of that, by default, your emerging and frontier market currencies weaken, and the kwacha has also taken a beating. So very, very strong inflation environment. So because of that as well, we've actually seen inflation up 16.7%. And for the central bank, that is the biggest driver of what monetary policy should be. So the central bank always does a forecast. So they go and look at, sometimes they go 4 quarters, 6 quarters, or 8 quarters ahead and go and see what inflation looks like and then come and make action now to prevent it from actualizing. So 50 basis points adjustment, we're now sitting at 14.5% because the central bank is seeing FX depreciation as a very key driver, big driver of inflation. And interest rates have actually gone up. But at the same time, as interest rates go up, because their forecast for inflation is now 14.6 for 2025 from 13.9. So it's actually going out. So clearly, I don't see that inflation coming within the 6 to 8% target band in 2025. And the central bank was honest about it. So their aim is now to bring inflation closer to the target band, maybe next year. But at the same time, while this is happening, there's been a big drive and shift towards mining. The thinking is that the Ministry of Finance on the fiscal side has a budget to deliver. A budget is a revenue of estimates and expenditure. So you need to raise that money. And the pronouncement was that 80.3% will be raised domestically through taxes and other means. So the challenge you have is that holding everything constant, assuming we will not have any headwinds materializing. But if the headwinds then come, you will then be forced to go and raise part of that money from the domestic money markets. And that starts to push the curve upwards, which is a discussion I'll come to as a reason to why the curve has come down. So then you look at taxation, and that's why you see there was a number of pronouncements. I think when we began this year, there was this AIT, advanced income tax, small taxes, property transfer taxes, because it was believed that Zambia is on a path to modernizing its tax structure, and the belief is that they can actually collect more. And if they collect more, that will then fund fiscal programs, especially in a time when we are in a tight spot. If you look at the World Bank report that IMF last review, they said Zambia was still at risk of debt, default, and distress. We just restructured our debt, and now we're beginning to pay. So nothing has really changed. Think of it this way: you were very sick, and you've just finished your malaria medication. You're still weak. So before you can, strengthen,
and be productive.
Exactly. So the risks are that if there will be any headwinds that will come, it means that it will then force the government to go back to the domestic market. And if they go back to the domestic market, they'll overcrowd it. So that liquidity that was supposed to go into my business and your business and any other businesses will actually go to the government. And then that's the overcrowding effect we talk about. And then the curve will start to push upwards. So the exciting thing about mining is that if we get this right in terms of production, when the price of copper is going up, it means that there'll be more collections in mineral royalties. And mineral royalties, I like to look at them as a cash flow to the fiscal purse that then is able to fund a number of fiscal programs. Our reserves will also go up. Our reserves are sitting at $4.6 billion, which is 4.3 months. $4.3 billion, which is 4.6 months of import cover, which is an improvement because Zambia, At some point, Zambia used to be under 3 months, and it was very scary. So you can see that there's a target to build reserves, there's a target to collect more and fund fiscal programs, and then also don't forget that our debt restructure is running on those scenarios, and those scenarios are very strongly linked to copper. So because your copper will do well, you will have more cash flows, you will have more revenues, and then you should be able to service debt without pressure and dipping into your reserves. But then talking about FX and everything, the way it's playing out, let's look at the bond market. The curve is at a record low. The curve has come down significantly. Right. If I look at the composite bond yield, when we weight everything, it's now sitting at 20.1%, which is 441 basis points compared to a year ago. And the bigger jump of that was, I think about 100 basis points was more like in the previous auction, bringing it sort of down. So you're looking at a curve that has come down. But the question is, you'd be asking me, Mwelwa, is what is really driving this curve coming down? Correct. Last year, there was a deliberate move to reduce dependence on the domestic markets for borrowing. And that's why you've seen so much pressure on ZRA to collect. Correct. I know they always talk about, no, we exceeded our budget, keep pushing it up, exceeded our budget, push it up and do even much better. So that's one. So there was that strong push and shift. But that was in the spirit of, let's not congest the domestic markets, but let's allow that liquidity to find a home in SMEs, and we can drive private sector growth. Right. Second point of call is there were favorable monetary conditions in the US. Interest rates started coming down. Jerome Powell started cutting rates because he wanted to stimulate growth, and he wanted to address the issue of unemployment, so to make it that attractive. So when you see the Fed cutting rates, it means even treasury yields start to come down. But like I said, liquidity is like technology. It's got no boundaries. So then it starts sniffing around and saying, if my interest rates are coming down, where else can I go where yields are making sense? Correct. It was in Africa, Kenya, Zambia, Rwanda, premiums above, way high. So you know, you get compensated from taking risk. So we started to see a bit of flows, and we started to see a lot of investors coming. When those flows come into Zambia, they give the 𝗬𝗪𝗏 positive Q, because they come with dollars. They convert those dollars to kwacha, and it's those kwachas that get locked up in bills and bonds. So you see there's that. So when you start getting all these flows, you start seeing the benefit in your currency. And then, yeah, so, and then on the short term of the end, we started to see a bit of demand on the 2, 3, and 5 year points as well. And of course, if you see a shift on the shorter end of your curve, it's actually signaling risk, because sometimes people are not comfortable taking 10-year risk. They would rather take 3-year risk to say, if I invest, I get a return, it matures, then I can roll over. Right. So all those factors. But then inflation started to tick upwards. Then we had this US issue also kick in, because now what we're seeing is Trump had promised that he would be adjusting taxes to make it attractive for US businesses. That started to push yields upwards, treasury yields. And you know what that did was it started to reverse the trend we were seeing. And that's why I think in the article, there's a question to say, where to next? You know, in the next couple of weeks and months, there's a lot of uncertainty. All those policy executive orders that have been changed, they're just making the world extremely jittery. And when the world gets jittery, you know what happens? Everyone starts demanding dollars because it's a safe haven. Right. People start buying gold and silver and waiting to see what's going to happen. Everyone is looking for some sort of stability. So that's exactly where we are. So if you look at the bond curve, it's sitting in the 20s. You're looking at 20.3 for 5-year money. 5-year money was as high as 25.5 at some point. 15-year money is about just under 22.8%. And you can see that. The interesting thing about the yield curve, Mwelwa, when I look at the yield curve, I think about term funding. Term funding is what commercial banks look to peg money. So if you went to a bank today and you said you wanted a 5-year term loan, the question is, if my 5-year is paying me 20.5%, the question is, why should I lend you at below 20.5 when I can just get that money and go and lock it up in the 20 point. So that's the dynamic, and that's why the shape of the curve is very important. So you can understand why the central bank rejects certain bids. It's because you will have an investor who's overzealous, who has perceived risk in their mind and thinking, for me to lock up this money, I think let me demand for a higher return. The guy will throw in a bid of 25%, and then you get a central bank said, reject. And then what they accept should also make you understand that the shape of the curve would determine the term funding trajectory, and that's what determines the cost of funding. If we work in reverse, I always get asked this question when I sit on a panel. People say, why are commercial banks lending rates very high and everything? And I'm like, well, the answer is go sort out the fiscal side. And then when the curve comes down, then a conversation. But there's a lot of financial innovation that has happened where people are now getting cheaper credit lines from maybe outside the country. Of course, sovereign rating is an issue. Then they are then able to channel those monies into sectors such as, like climate monies are far much cheaper. They're lower spreads than what you would actually get. I know that was a mouthful, but I thought I should maybe just explain.
No, but thanks a lot. It does elaborate. Now, just as a final comment, looking forward, obviously very recently, Financial Insight, noted the US aid, debacle, if I can call it that, with the Trump administration, as you've alluded to. This is something that, we depend on, quite a bit for medical, et cetera, and other things. But then the state of the global atmosphere, as it were, now, what would you say are some of, maybe say, 3 top risks that, for Zambia that we need to look out for going forward?
I think in light of the US development, especially on US aid, I think it's very clear that 60% of the healthcare budget comes from sort of US funding. And maybe just to give it context, a bit of some of those other challenges such as water reticulation, clean drinking water in places where, to prevent people from suffering from cholera and whatnot actually came through the US. So if US funding is going to be cut out completely, then I'm worried about the healthcare sector. The quality of health might come under pressure because we have quite some significant dependencies. I mean, HIV, AIDS, tuberculosis, all those programs and the like. But this could actually put pressure on the sovereign. And I think I did highlight in one of my analysis that we are already in a frail position and are trying to move forward. We had a drought, but I think this will be a topic being debated in Parliament when they open. I don't know if they open or they're opening next week. It's an urgent call. How are they going to plug that deficit? The healthcare sector is so critical that the quality of health determines the quality of labor, and labor is a factor of production. So you can actually see that from a productivity perspective. But it also gives an opportunity to other players to step in. Like, look, this could manifest in a geopolitical issue where if the US exits, then China then steps in. So there's that sovereign pressure, yes, number one. And and then the quality of health, of course, you can look at your fiscal budgeting. Maybe governments need to think about allocating a higher amount and not really depending on US aid. But I think it will also have ripple effects when it comes to employment, because quite a number of people were employed by the US aid. And the benefits for me are what worry me, because you can hire a few people, but then you would be shocked to be told the benefits trickle to 1.3 million people. So what's going to happen to those million people? And then for banks, maybe on a smaller note, is like if USAID was receiving money, that was a deposit for banks, and that was USD. So, because Zambia receives about $600 million annually in aid. So if that 600 goes, that 600 needs to come from somewhere else to plug that gap. So, of course, some of these things have ripple effects on overall performance of the economy. But I like, look, being a risk person, I have learned to not look at the gloomy side, but what are the opportunities? The opportunities are that we now need to start thinking about investing in technology. Curriculums must change. Maybe we need to manufacture drugs. Maybe we need to look at how we can, look within ourselves, or maybe trade within ourselves within Africa, because we always look outside Africa. So maybe this is an opportunity to look within Africa. How can we partner and all that? It's actually made a lot of African heads of state sit up because no one saw this coming. And if there's another one that, I'm sorry to digress, the one that I'm really thinking about, because I haven't heard what the position is. I know that IMF gave a position on Trump's policies, because I know that the two have never seen eye to eye. Because Trump also feels like the US contribution to the IMF pool as a financial institution, he feels strongly about how much they contribute and where that money is going, because it's not going to help the US people, but outside. So Yeah, and then if you look at health, also look at the World Health Organization. I think that's a big blow, right? For him to move out of the WHO. And the WHO has been very critical. I know they've got their issues, but yeah, from disaster recovery, crisis, health issues, it's a big blow. So this is, we got a snippet, an idea of what healthcare was like in COVID times. Now, can you imagine if we had another COVID and then without US funding, how would it be? It would be catastrophic, but those would be my views. Absolutely,
absolutely. Mutisunge, thank you so much for sitting down with me on this. It is still Q1, and we'll be looking forward to engaging with you soon for more insights.
Thank you for hosting me, and I'm really excited to be on the show.
Absolutely. So there you have it. I've been speaking to Mutisunge, who's shared with me on a number of issues. So as always, we encourage all our followers to continue to follow the insights on Financial Insight. This is Mwelwa Chibesakunda interviewing from Africa Works at Agora Village in Lusaka. Get to know.